at your own risk. And also recently, there are many scammers of mine. So I only do web page and YouTube, this one, and my second channel, and Twitter, ForexK, and ForexK Notice, and all the other accounts are fake. If you see Instagram of mine, Facebook of mine, or Telegram of mine, these are all fake. So just be careful, because recently I got the reports that there are so many scammers of mine out there in the world. Okay, so let me switch to TradingView and start to talk about which pin bar is reliable and which one's not. So whenever you see the previous chart, for example, let me start to talk about why you think it's fake, first of all. And so let's say, let me identify the pin bar previously. So we can maybe pick this one. This is Euro CAD, and I found the one here from the 20th of August last year. There was a pin bar, and when you see pin bar, it's like there's a smaller body than wick and wick pointing upwards. So in the textbook, usually what it says is that when you see this, when the market goes up, and when you see pin bar, it reverses and goes backwards. So if you only know this knowledge, then when you see this pin bar next time, you believe that it reverses and you sell. Let's say you see pin bar and on this candlestick you take a sell. Sometimes it just goes backwards and breaks the pin bar bullish, and the market continuously goes up this way. So, and the reason why this happens is because most likely you only study this in the textbook or the previous frozen chart. Because there's a big difference in between the frozen chart in the past and also live moving market. We can't see the future, we cannot predict the future, and we're not here to do it. We're not here to predict the future, but we can only create the scenarios in the future. And that's a key to resolve this issue right now. So if you only see the previous chart, if you have studied the Ichimoku or any candle patterns or wave patterns, if you only studied it from the previous frozen charts, then you believe that this will be a reverse, but afterwards it just goes up. But because in the textbook, usually it doesn't talk about the fake pin bars, because so for example, in this chart, you see a little pin bar here too. Or let me give you a better example of the reverse or the fake reverse. So let me try to identify which one was a fake pin bar. Let me see. So maybe this one. Let me enlarge, and this time let me cancel Ichimoku because I would like to talk about only the candlesticks. So here you see a pin bar, and after you see this pin bar, you might think the market reverse. So the next candlestick became bearish. You think that the market breaks and continues to go down, but in this case it went upwards this way, and this happens many times. So that's another example. And let's see, another example for the pin bar would be, let's see, we have many of these examples. Let's see, along this downtrend, looks like there wasn't any pin bars. Pin bar or doji can be a confirmation for the reverse. So maybe here too, if you see these two little doji candles, pin bars, where you see the very tiny body and wicks up and downwards, longer wicks than body, these are also considered to be a reverse, typically in the textbook. So when you see this candle, you might think it's bearish, so you might sell. You may sell here, and the market goes up afterwards. Because when you see this frozen chart, you know that these are fake. But when you see the real moving chart, and when this appears, then you might think that it's reverse, and you start to sell. and you might lose if it's fake. Because let's say I will delete these future candles like this, let's say, and when you see this, when you see this pattern, you may think that these are the pin bars as we discussed earlier, and also there was a double top. So when you see this structure, double top and wicks upwards, and there's also some wicks upwards here too in this area. So you can see that there are strong rejection here, and after this you might think that the market goes down, so you sell, but the market goes upwards this way, as we saw earlier. So the reason why this happens like this is that the reason is very obvious. And the reason is you didn't wait for the candlestick close. That's it. You didn't wait for the candle close towards the breakout on either direction. So this was the 17th of December, where you see the second pin bar. And as soon as you see this, you may take a sell on the 17th of December. Or after you confirm this pin bar on this day, next day, 20th of December, this is Monday, 20th of December, at the market open here, you start to place a sell. And you put the stop loss above the previous high. Reasonably speaking, if you sell here, then most likely you put the stop loss above here. And by the end of the day, you realize the market goes up and hit the stop loss. You close with a loss in this case. And again, the reason was because you didn't wait for the candlestick close on the 20th of December. Because if you could wait for a close, then you already know that this was a fake. But because you didn't wait for the close, afterwards, you know that this was a fake. And this is the most common pitfall, most common mistake that the newbie really falls into. Because I was the one also. Before I was studying a frozen chart in the textbook or frozen charts that the people talk about, the candle patterns, or not only the candlestick patterns, but also in Ichimoku strategies, or even Bollinger Band strategies, or stochastic strategies, RSI strategies, any strategies, even time cycles, or price theories, or any strategies, you name it. Whenever I studied them in the past frozen chart, it works, but in a real trade, it doesn't work because I didn't wait for the candle close. Was my big lesson. And because of this, I lost so much money in the past. So until I realized the importance of the candle close, I didn't realize that this will be a fake. So, and that's why I recommend everybody to backtest and run the Forex tester or run the bar replay on the trading view and cancel all the future candles, cancel all the future indicators, and see if you can trade. See if you can analyze charts and trade. And if the most important part for this is to verify, most important part to backtest is not to verify what works in the future, but to verify what doesn't work in the future. That is more important because sometimes you see fake breakout like this, fake pin bar, fake double top, fake Kumo breakout, fake Tenkan-sen, Kijun-sen, gold cross, dead cross, fake Chikou-span breakout, fake time cycles. You see many fakes. But if you run the tester, if you run this bar play without seeing the future candles, then you know the reason why it doesn't work. And you start to realize when it works and when it doesn't work. So this is one of the examples about the double top, fake double top and fake pin bars, but we see many examples like this way. So coming back to this topic of the fake doji break or fake pin bar break, I found one good example on Euro CAD because today, this is the 4th of March and yesterday was the 3rd of March. And you see the pin bar. You see the pin bar here. And actually, I already got this question by email also, and also question from the Ichimoku community members was that if this pin bar was trustable or not. The question was, again, was this pin bar trustable for the reverse or not? How can I identify this? And you know the answer now already. You have to wait for this candlestick close because this is a daily time frame and it closes in 10 hours. So if it closes below the pin bar, which is 1.3966 level, then from Monday onwards, most likely it continues to be downtrend. But if it breaks bullish, then it becomes a reverse. And as a result, you see the pin bar was a reverse confirmation. But until you see the market breaks the previous pin bar high, you cannot tell still that this will be a fake or not. I hope that makes sense. So until you confirm the candle close, you can't tell if this pin bar was reverse or not. So, and when I talk about this, you may wonder, I don't want to wait for one day. I don't want to wait until next Monday. How can I capture whether this pin bar will be fake or not today, within today? And there is a way to do it. There's a way to do it. So you can't see the candle close in daily chart, but you can see candle closes on the lower time frames. So whenever I see this and whenever I see this potential reverse or fake out, I look at the 1 hour chart. So let me switch down to 1 hour chart. And then you see this pattern. In 1 hour, it looks like this. Right? So after the previous support level breakout, the market has been moving down. It went downwards all the way, and then it went up and went down, and now it's going sideways. So in 1 hour candlestick, it hasn't closed on either direction. So at this moment, we can't tell which way it breaks. But sometimes you see the 1 hour candlestick shows a descending P wave. Like the lows are at the same levels, but the highs getting lower and lower. And you see this descending P wave. For example, when you see this in 1 hour chart, you see this was a candlestick after pin bar in the daily time frame, but you see more sellers than buyers in 1 hour time frame. So when you see this, you can expect a potential breakout bearish. So you can look for the sell chance and expect the market breaks the support level. Or if you see the ascending P wave from here, the market went all the way down, but afterwards the market touches resistance and retraces backwards, but it doesn't break the previous low. But in the halfway through, the market goes up this way, and it went backwards without breaking the previous low. It goes up again. When you see this, this is ascending P wave in 1 hour, and you can expect the market breaks bullish in 1 hour chart before waiting for the close in a daily time frame. So when I see this, I already look for the buy chance and expect the market breaks bullish. And as a result, you see the daily pin bar will be true. And afterwards, it retraces backwards all the way to either Tenkan-sen or Kijun-sen in the daily time frame. So once again, simply by looking at this pin bar previously, you can't tell whether this will be a fake or not until you see the candle close on the next day to see whether it breaks bullish or bearish. Or you can look at the lower time frame 1 hour and you see the candlestick pattern, and see which way potentially breaks, whether it's a descending P wave, ascending P wave. And in this case, I see that it has been moving up and down its range. So there is no potential direction in this case in 1 hour. So I can't tell which way breaks. So the other thing, how you can identify the breakout is you wait for the close in 1 hour. We have about 10 hours for the daily candle close. But in this 1 hour, it may close in the next 2 hours. It may close below the previous low in like 3 hours, let's say. And when you see this breakout in 1 hour, then you can capture this, you can capture the breakout before waiting for the close in the daily chart. And after this, you can expect the market goes bearish in 1 hour. And as a result, most likely, the daily close will become below the support, right? Or if it goes up and if it breaks, let's say in the 4 hour, in the next 4 hour, if let's say the 1 hour closes above the resistance of the daily previous doji candle, and then before waiting for the daily close, you expect the market reverse from Monday. So you can already place a buy before it happens, like this, before waiting for the daily close, let's say. So like this, you can, by waiting for the 1 hour close, you can expect which way potentially breaks within the day. So right now I see its range, but I see potential double bottom here, potential double bottom. And so neckline in 1 hour, double bottom was here at 1.4036. So if the market breaks the neckline, and if it closes, if 1 hour chart closes above the neckline, then I expect the market goes up this way. It may retrace backwards and goes up this way too in 1 hour. So I put the alert above that level, 1.4036, and once it triggers, I come back to chart, and if I can find a good trading edge, then I take it and hold the buy like this. So that's possible too. So this is a practical way to understand how you can avoid the fake pin bar or fake double top, fake head and shoulders and so on. Before, I was only focusing on one single time frame, so there was no way to capture whether it's a breakout or not. But now I know exactly whether it's a breakout or not, or reverse or not, by looking at the lower time frame situations. So that was the main topic for today. So from now, let me give you some analysis for other markets. So let me take the Ichimoku lines again. So now again in EuroCAD daily chart, previously there was a doji, and also I see Kumo flat and Kijun Sen flat. So in this case, it may retrace and goes backwards too. But you can be sure by looking at the 1 hour situation. So speaking of other markets, as we discussed earlier, like this is the strength chart, and I do see right now the New Zealand is very strong, and AUD is also very strong, and in terms of weak currencies, Euro is weak, and CAD is also weak. Pound is getting weaker now. JPY is slightly moving up, and Swiss franc is also very strong. So we see many volatility in each currency. So in Forex as a pair, we see many markets moves. So I do see trends on 1, 2, 3, 4, 5, 6, 7, 8 pairs. So quickly covering all these pairs. First, Euro USD. Euro USD, it broke the support of 1.1121 level, and now it's continuously going down this way. So if you're selling, then there's no reason to exit. However, there will be a Euro news, and also in the US, there will be non-farm payrolls. So to be safer, I will exit some profit before the news happens, because we never know how the news can impact the market. So after the news or at the news, the market may spike up and you may lose all these potential profits. So to be safer, I exit or I move the stop loss up slightly above the current position, current market level, and then just keep there. And if the market reverses, I will just let the market hit the stop and fix a profit there, or simply exit before the news happens. But Euro USD has been downtrending, so it still looks like downtrending. No reason to exit yet. And Euro AUD is also moving down. And as we discussed earlier on time cycles on the video, it has been moving down. So yeah, there's no reason to exit in this case either. The potential low was actually the potential future Henkabi for the low was the 7th of March. So today or next Monday, it may reverse. But still, this is downtrending. So still, you can follow the downtrend. Until we see reverse, we can still try out the profits along the way. And Euro Swiss franc is also bearish. It broke the support. So I will take out this arrow. Right now, it has been bearish. So no reason to exit yet. And pound AUD has been moving down too. It broke the support and now it's going down. The previous support level, the most previous support was 2nd November last year, and it is breaking that level. So here too, to be safer, you want to wait for the candle close in the daily chart. And if it closes below the support, and then from Monday onwards next week, you can look for the sell chance. And pound Swiss franc is also bearish right now. And AUD USD is bullish. It broke the neckline of the previous double bottom. So this is now turning bullish. There might be some retracement along the way, but to me, in the long term, it's bullish. And AUD CAD has been moving up all the way, but this is in Y wave structure. And also 0.9376 is actually the resistance from the last September and also last July. We have some resistances at this level. So Y wave and resistance hit, the market may reverse. So to be safer, I stay away from this AUD CAD. I usually don't jump into the market in this situation. I wait for the market consolidate, retrace, charge energy, and look for the buy chance afterwards. And also, AUD Swiss franc is bullish right now. You see Kumo up, Kijun Sen Tenkan-sen up, and Chikou from above candles. So in the long term, I think the market goes up to 0.6812 level. And so these are my favorite Forex pairs to trade today. And also, let me give you analysis on gold. Because on gold, I found something very interesting. And you can refer to it to trade next Monday. And what I found was that here, you see the Kumo flat, Kijun Sen flat. But as Kijun Sen takes the last 26 high and low, and Kijun Sen is taking this high, the high from the 24th of February, due to the news, what's happening between Russia and Ukraine. There was a long week spike up and retrace backwards. So Kijun Sen is taking this high, and also the low from the 28th of January, because this was exactly 26th previous candle. So what may happen, or what exactly happens on Monday, will be Kijun Sen turns bullish, because Kijun Sen on Monday will take the low on the 29th of January here, and the average, the mid price will rise because of this. While high remain the same level, low gets higher and the mid price gets higher, and that will make the Kijun Sen higher. So this is something that we can predict I usually say we can't predict the future, but this we can predict by the calculation. So Kijun-sen will move up on Monday, even if it doesn't break the resistance. And if Kijun-sen moves up, while Tenkan-sen remains flat on Monday, what happens to Senkou Span A will be Senkou Span A also turns bullish on Monday. So on Monday, I come back to gold and look for the buy chance and expect the market breaks the resistance potentially next week. So if you know the calculation of Ichimoku, you can actually predict these future angles of Tenkan-sen, Kijun-sen, or Kumo like this, so that you can capture when to look for the buy chance or sell chance in the future. So, and briefly speaking about the Bitcoin, because I know there are many crypto traders in my community. So here's Bitcoin, and it has been ranging right now. But you see the lows are higher now. So this is ascending P wave. I can see that there are more buyers and sellers. So eventually, I expect the market breaks the resistance of 45,535. But before that, I expect the market reverse backwards. It may touch this trend line and bounce and goes up this way too. So we'll see which way it goes. But right now, this is not a good time to buy because I don't see a potential breakout situation on these candlesticks and also Ichimoku lines. So that's the overview of the market for today. And I will close the video for now. But yeah, thank you for joining and thank you for watching the video today. If you liked it, please press the like button. So yeah, just make sure to wait for the candle close whenever you see the pin bar, doji, or engulfing candles, or double bottom, or head and shoulders. You have to wait for the candle close to be able to decide which way the market is going. And until you confirm the candlestick close, you better wait, is my advice. All right, so yeah, since this is Friday, I hope you have a great Friday and great weekend ahead. And I will see you the next time. So until then, please stay healthy and stay safe and stay gold. All right, bye for now. Oh, and also lastly, just watch out the news. Watch out, there will be news in Euro and USD. There will be non-farm payrolls tonight. So just be careful. If you're not confident, then simply stay away, come back Monday, because markets are always there for you. All right, so I will see you next one. And please stay safe and stay healthy and stay gold. All right, bye for now. Mata ne. Thank you.